Hey everybody, this is John and welcome to the free video. And for today was kind of interesting because Monday started off a little sloppy. If we look at the daily charts, you can see that we came back down into support, and it was a little hit or miss as to whether we were going to kind of come down and slam into a little bit lower levels before attempting to turn higher. And today out of the gate, things were strong. And the main thing I want to point out today, well, there's two things. One, we did break out, so I would call that an official breakout of the daily downtrend. Now, of course, it does need to close the week there. The downside of it is that the volume is pretty pathetic. Okay, so that's just it. But we do have a long signal, and there's no point in fighting it. So at this point, for all intents and purposes, that's a breakout. And then the question is where do we go from here? Because there are some sectors here, energy, that aren't really participating, financials that have been lagging, okay? But at the same time, we're seeing a lot of strong moves, especially from earnings stocks, where if they had good earnings, they just continue to go higher. So LinkedIn up $2 today, Netflix is up like $10 today. Apple, of course, new highs. I mean, that thing just continues to power along. So, and that is kind of driving the NASDAQ here. And on top of that, bonds here continue to sell off. This is actually a fairly steep sell-off in the bond market, to the point where I always buy pullbacks to the 21 EMA in bonds because it's worked like 19 times out of 20. But I cut it loose today. I may get back into that, but on something like this, I mean, that's kind of, that is sending a message. And the thing is, like, the employment numbers that came out were strong enough that the idea is like, wow, the Fed may actually have to raise rates. Now, if they start raising rates, that would essentially push bonds down very low, and that's what the bond market here is pricing in. And that's just kind of what's happening now. I think ultimately bonds have another shot at new highs, but there's no point in holding on to it. I mean, you wait, for a turn, wait for some evidence that it's getting ready to kind of roll. And some of the things that we can do with that is we can look at the waves here on some lower time frames. So if we look at this, and let's actually turn on the waves here. So status on. And so on a daily chart, you can see that in terms of the C wave, the long-term trend is higher. The B wave, the long-term trend is higher, but the shorter-term wave is lower, right? Well, if we're looking for something to turn higher, you essentially just kind of drill down to like a 30-minute chart. And on a 30-minute chart, of course, this is going to catch the ebbs and flows more cleanly, or more of an intraday basis. And you can see that the longer-term trend on a 30-minute chart is down, and the intermediate-term trend on a 30-minute chart is down, and then the shorter-term trend on a 30-minute chart is down. And what we're looking for to get a buy signal on the daily chart is that these actually turn higher, okay? And that kind of is showing you kind of the ebbs and flows of what's going on. This 30-minute squeeze here with the waves below zero, from an intraday basis, point to continuation. And what I would want to see as evidence that this is going to start trying to turn higher is I actually don't need to see all three, but I need to see the A and the B wave cross higher. That at least is telling me that the freight train of selling to the downside has halted, and it becomes it's a very nice kind of a safe way to get into a trend without having to catch a falling knife, okay? So speaking of the wave, so we've got a lot of new folks that have joined us, and I always like to kind of really narrow down the whole idea of the waves, or any setup for that matter, into a very simple terminology, and it's this. And I just want you to remember this, and it's 1/2 second. And if you have to look at a chart for more than half a second, okay, then it is no trade, and I cannot emphasize that enough. The best trades are the most obvious trades, period end, no matter what time frame you're looking at. And I love this example here because Baidu is a stock that I like to trade, and this is on a 45-minute chart. And by the way, the time frame is irrelevant, okay? And that's one of the things that one of the questions I'll always get from newer traders is like, what time frame is the best? Is it a 5-minute chart, or an hourly chart, or a daily chart, or a weekly chart? The time frame is irrelevant. When you get a buy signal on a 5-minute chart, it's going to last for about 30 minutes. If you get a buy signal on a daily chart, it's going to last for 7 or 8 days. If you get a buy signal on a weekly chart, it's going to last for 7 to 8 weeks. I mean, a buy signal is a buy signal, and it lasts about 5 to 8 bars. So time frame is irrelevant. Okay, so the question then is, here's 3 setups, is what is the one that's the most obvious? Okay, so if we talked about the waves, if the C wave, the longer term trend is above 0 and accelerating, and the intermediate term wave is above 0 and accelerating, and the long term wave is above 0 and accelerating, and then you combine that with the squeeze, that is called the no-brainer trade. The turbo Porsche setup is something that I've called it. I mean, it's just it's the highest probability that you can have. And what's interesting is, like, Tesla in 2014 had a lot of nice high probability setups, but in 2015 it has had 0, and I'm not trading it. Okay, I made a lot of money trading Tesla last year because everything lined up, but it's not lining up this year, and I don't care. It's not like, oh, I want to make more money in Tesla. I don't care about that. I care about the setup. Okay, so what does that mean? So here's 3 setups. So if we look at this one, here's a squeeze. Like, great, it looks like it's a squeeze to the downside. Should I do this one? Well, the A wave is below 0, the B wave is above 0, the C wave is above 0. So if you notice right now, what just happened is it took me more than half a second to even go through that. And if it takes you more than half a second, it's no trade. Okay. Now, had you bought puts on this and covered exactly at the gap down, would you have made money? Yeah. But if you didn't, if you were working full time, you would have lost money. Okay, so here's the next signal. Okay, here's a squeeze, momentum. Okay, so A wave is above 0, B wave is, I don't know, see, more than half a second, no trade. Okay, now, you might have thought that was a long, great, so you buy it at the open, and then intraday it kind of, right? Okay, so here's the next signal. Okay, here's a squeeze. A wave's above 0, B wave's above 0, C wave's above 0. 0.5 seconds, we figured that out, that's a buy. I mean, look how obvious that is compared to the other 2. And once you understand what an obvious setup looks like, it'll change your trading life because you'll stop chasing mediocre crap. Okay, this is, I think this is going to go lower. This is above 0. What should I? But I'm, same thing here. It's like, This is obvious. Wow, a squeeze is setting up. Squeeze is telling us that there's about to release energy. Man, short term, above 0, above 0, above 0. The chances of this going higher are very, very, very high. Sell a put spread, buy a call debit spread, whatever you want to do. But notice how clean this trade was. And this is a 45-minute chart. How long does the trend last? 5 to 10 bars, whatever. After 5 to 10 bars, get out, move on, go to the next trade. So anyway, that's my story, and I'm sticking to it. Okay, so for those of you, if you're newer and you don't, so my goal is, if you have the waves, just kind of, it's a way to kind of use them more cleanly. If you don't have the waves, we have the waves, so the A, the B, and the C waves. So on Thinkorswim, there's what's called the combo wave, which is, essentially you see kind of the C wave. But this, if you want to get all the waves broken out, including the B waves, this is what you'd want to do. So the waves are now available for Thinkorswim, TradeStation, NinjaTrader, Multi-Charts, eSignal, Infinity Sierra Charts, and Trade Navigator. And then they're also available on Interactive Brokers. Okay, so how the waves work, and I always judge an indicator by, okay, if I was trading one lot, how long would it take for this to pay for itself? And this does not take very long. Normally on the site, this is set up as a $1,400 indicator or a $1,500 indicator. If you're seeing this email, you can get it for $497, so $1,000 off. And included with this, you are going to get a class on the ABC waves and how to use them. Okay, so yes, it's an indicator, but it's also an educational class on how to use it. So what we want you to learn with this is an in-depth look on how to use the A, B, and C waves into your trading plan. And most importantly, and this is the part that a lot of people don't get, is how to use the A, B, and C waves in multiple time frame analysis to put yourself on the right side of the trade. This is, as Mark Douglas describes, edge. And once you understand this, you get an edge. And once you have edge, you can create consistency in the markets. Okay? And we'll also talking about there's a 5-point ranking system for using the waves as well. And you only, it kind of shows you like the probability of the trade. So simpleroptions.com/ABC. Hope it helps. You guys have a great night, good trading, and we'll see you at the next update.